A lot of nervousness around the market and around the world this morning. Futures down more than 100 points below fair value. A large part of that due to the yen hitting a one-year high against the dollar this morning. And here with more on that is Boris Schlossberg, currency strategist at dailyfx.com. Boris, 114 yen, 2-year now at 420. I guess is the yen the story this morning?
Oh, yeah, no doubt. I mean, we actually hit 13.59, I think, was the spike low so far this morning. And we could very well revisit that before the end of the day, depending on how the Dow trades as we open up in New York. Yeah, no, I mean, that's been the story. As a matter of fact, the moves were so wide today, just before I rushed out of the office, I checked euro-yen, because remember, I was saying euro-yen is the critical risk proxy in the world right now. And the down move in the euro-yen was larger than even the move we had in 1997, 1998, when we had Asian contagion and a lot of risk liquidation then. So it's been, very, very sharp downside move.
Does it feel like a washout to you?
No, it doesn't feel like a spike bottom. I think the most realistic scenario is we have a natural retrace rebound, and we probably test the bottom again and see what happens then. One of the interesting things that's happened this week is that the Japanese investors, who are the biggest proponents of the carry trade, the Japanese retail investors are the biggest buyers of the carry trade, have been absent because Japan has been on a holiday all week long. They've just come back. It'd be interesting to see if now, having been stuck with probably some very serious margin calls, whether they're going to come back for more or whether they're going to join the rest of the world and become a lot more risk averse. Having said this, though, I think that we are definitely approaching value levels, quote unquote. And yeah, I hate to sound like Warren Buffett. There's no such thing as value in the currency market. But here's a couple of thoughts to think about. Japan right now, chances of a rate hike in August, pretty much dead. On the other hand, take a look at UK. Economy is still growing very strong. Overnight, we had very buoyant retail sales, a surprise to the upside. And if the world stabilizes, there's a potential that BOE could go to 6% money. So the spread between the pound and the yen could still stay very, very attractive.
Let me bring in David Sowerby, our guest host, who hasn't got a lot of time to chat so far just because of the markets this morning. You're listening to what Boris is saying. Do you agree?
I think ultimately that dollar-yen relationship, because of trade imbalances, goes below 100. We still need to see the dollar depreciate further.
To 100 yen?
Yes.
We heard Santelli say 105, maybe, Boris. What's a reasonable target number?
The trade issue is very interesting. Yesterday we had the tick data come out, and here was some very interesting little kernel of data out there. Basically central bank flows were something like 57 billion, and private flows were less than $1 billion, meaning that basically most of the financing is coming from central banks. If foreign central banks step back and refuse to finance the trade deficit we have in the United States, absolutely correct. We could see, dollar-yen really go down to 105 because then that issue comes off the table. For now, it's a non-issue. As long as we have enough of capital to offset our trade balances, it's not been an issue so far.
But just stick with it for just 1 second. How would equity markets react at some point? Would they be able to think for themselves?
If dollar-yen goes to 105?
Yeah.
Well, I think that pretty much correlates to 10,000 on the Dow. It's really, you're going to have continuous risk liquidation because this one cycle drives the other. They're very interrelated.
Percentage likelihood this scenario happens?
If you asked me yesterday, percentage likelihood of a 500-point drop in euro-yen, I'd say pretty small.
Sure.
Now I think, it all depends. Again, this is the other thing. Dr. Poole pretty much said we have no reason to lower rates. But remember, markets goad the Fed into policy. I think the markets really are asking for a rate cut for some kind of stabilization. And it's going to be interesting to see if the Fed is going to be responsive. If they're going to be stubborn, dig in their heels, and refuse to essentially listen to the markets, they could push the Dow down 10,000.
Right. Yeah, well, you want to see some flexibility, and we didn't get it yesterday.
Exactly.
I see you're not wearing a tie today either. I'd forget the tie.
Exactly. I only wear ties for my pre-planned CNBC appearances and bar mitzvahs and weddings. So today I had to be pulled off the desk.
Boris, thanks for coming in.
Thanks,
Good
guys.
to see you, Boris Schlossberg.